Welcome. Thank you for joining us today. I have the privilege and super happy to have Richard back and talk about investorresidence.com, which, by the way, we embed that in everything, and it automatically sends everybody to the website, which was the good idea, right? That was the whole idea. So thank you for being here, Richard, and thank everyone for joining us today. We're broadcasting live from, I think you're in Arizona, Richard, and we're here in Palm Beach, chasing the sun. We're usually in Park City, as you know, in New York City. So we're super happy to have Richard again. As you also know, we can't see or hear you physically, but we can see that you're on, and we encourage you to ask questions as they come to mind. We have a lot of people coming on today, so please, as they do come to mind, post them in the Q&A or the chat, and we'll get to them as soon as possible. Also keep in mind that after you participate today, if there's anybody in your community that would benefit from hearing what you hear, you can send them to the Family Office Insights YouTube channel, or we're going to post it. Hopefully Richard will post it somewhere on Investor Residences, and you can find it there. Also, you're welcome to reach out directly to Richard, and we'll be putting everybody in touch directly, so you're welcome to do that. So just keep that in mind. If anybody would benefit from hearing what you hear today, you're most welcome to cause that to happen. So with that, Richard, thank you for being here. Take it away.
Awesome. Thank you, Arthur. Appreciate you having me on here again, and excited to share updates with everybody. We're going to go through some slides in pretty quick order here. I'm also going to give Laura a chance to introduce herself in just a second. She's one of the members of our team. I want to share with everybody that we've taken a lot of action since the last webinar. Before, in the last webinar, we said, here's 10 strategies we will be using. Here's the assets we have so far. Now we have 7 transactions closed with equity in 84 assets within our vacation property fund. We plan on hitting around 100 properties within the vacation fund. And real simple, the theme of this quick webinar is that we are buying low with all cash and seller financing offers, and then we're selling high after doubling the sleeping capacity of assets we acquire. We acquire properties in mostly fun locations, but most importantly, locations that are profitable. We are unique in a couple of ways, which we're going to get into here. And this is really the formula just to keep in mind and think of. The quality of any investment you do is based really on the team. And we have a team of 25 people who've worked together for 16 years since I started the business. We've learned a lot while running our investor club. I'll show you some really tangible proof of that learning. We are also a super host on Airbnb because we are great at managing our properties. And we have the proof to show. Our average rating is 5.0 over the last month. And actually, since we started, our average rating is over 5 or 4.9. And when you put that together with 100 vacation properties where there's not a lot of institutional capital yet, our goal is to double your money over time. We wanted to be very different than other real estate investment funds. It's probably already very unique that we have a vacation property kind of Airbnb focused fund at all. And to make it unique on the structure, we decided, since our core business makes us enough money day to day, that we don't need to make money off of your money until you've gotten all your money back and then double your money back. So there's no asset management fee per year that almost everyone else on planet Earth likes to charge you. There's no acquisition fee. There's no disposition fee. There's no financing fee. There's no capital raiser fee. 0 asset management fees of any type. And we don't make a profit anywhere in the model until you've gotten all your money back and have doubled your money. So the last 16 years, I've been running Family Office Club. This is a large investor club. We've done 190 live events over 16 years. We do 15 live events per year. Last year, I closed $85 million worth of transactions with my top clients. My number one client's a billionaire that we've done 19 transactions with. We've got a large transaction pending with them now. We bought billionaires.com a couple of years ago. We're interviewing 100 billionaires. We've interviewed 22 so far. You can see those interviews for free at billionaires.com. I've written 13 books. A bunch of those book covers are here in front of you if you're following along visually. And we have over 2 million followers on social media. This slide is important because you're going to see in some of the creative deals that we do, we wouldn't have known how to structure that deal. We wouldn't be able to negotiate that deal. We wouldn't have the leverage to even have the conversation of certain types of terms if it wasn't for Family Office Club being the mothership entity, which helps provide huge leverage for us and your money that would go into potentially investorresidences.com and our 100 property portfolio. So our team is what we're most proud about.
Hey, Richard, hang on one second, if you don't mind. Is that all right?
Yeah.
I know that people are thinking about this question. The prior slide, is Verbo not an option because you're focusing on Airbnb for a whole bunch of reasons? Or is that potentially other platforms that you might use?
Yeah, really good question. So Verbo is awful. The customer service is awful. The tech is awful. The administration's awful. Airbnb, it's night and day. It's not like shopping on Walmart.com versus Amazon.com. They both function properly. With Verbo, we just have trouble trying to do everything, and everybody complains about how clunky it is. So we can do direct bookings. We can go on booking.com, hotels.com. Some of our properties are sold through Marriott.com and their vacation stay property platform. And we do have some of our properties on VRBO, but we don't like it. And what happens in the algorithm is that if Airbnb sees that a certain property makes them a certain amount of money, they will rank it higher and higher. And if you're offline half the time in Airbnb's eyes, because you're selling on VRBO, your asset doesn't make them as much money as other assets. So they'll pump you more there. And since Airbnb has over 70% market share, it's good to be friends with the giant in the industry. And the equivalent is ranking really well on Amazon versus really well on Target.com or something like that, where, you know, Amazon's the giant for online. But great question. And the more questions, the better as we go.
Totally makes sense. And then we actually had someone ask us a question in the process of the invitation process about the fee structure, essentially you being able to absorb all the legal and the structuring and so on because of your base business. And it's clearly something that's attractive. Are you comfortable in knowing that the overhead until is it the disposition of the asset that will cause you to return it to the investment plus to the investors, or is it just making money on the Airbnb?
Yeah, great question. So you get quarterly wire transfers, which are tax-free because it's a return of your money instead of return on your money up until you get 100% of your money back. That's true. And then in the 5 to 8 year time window, we sell off, let's say 15 of the 20 transactions in the fund. That gets you a long-term capital gain. We then refinance the remaining 5 properties, and we might be left with 5 properties with 75% debt on them, but we've doubled your money out as an investor across the quarterly wire transfers that keep on going until we double your money, plus the long-term capital gain, plus the refinancing. So those are the 3 ways we get you the 2x return. And our only compensation, our only profit from this is being left over with 2 to 5 properties that have 70 or 75% debt on them. So it acts like a performance fee only model, essentially, because it's only at the end of the 5 to 8 years that we're getting rewarded.
Yeah, so the typical things that you can do to recapitalize, saying it differently, allows you to take money off the table and return the money. That's probably the biggest thing that can get you to return the capital on a timely basis. Is that right?
That's correct. And importantly, every other investment you probably do the rest of your life, you're being charged a upfront fee and an annual fee, and that just slows down the returns. And the only objection we've gotten to this model, some people say, oh no, well, what if it would have been a 3x return? I'm capped at 2x. I don't know if I love that. I say, well, if it was going to be a 3x return over a reasonable amount of time, let's say 7 years, like a normal private equity fund, well, that just means we're going to hit 2x faster and your IRR is going to be higher, and you can put your money in our next deal because now you love us, or in a storage deal or multifamily deal or wherever you'd like. And the other thing is that the 2x experience includes quarterly wire transfers. And so if you just pocket the money and have it sit in your bank account, then okay, your experience was 2x. But if every quarter when you get that money back, if you're putting it in other investments, you'll get 2.4, 2.8x over that time because you recycled that cash. We're not holding on to your money for 5 to 8 years and promising it's doing well. The quarterly wire transfers assures you that we've done something with your money. We have links to the Airbnb listings right on our website at investorresidences.com as further proof. And you can stay at the homes as a benefit as an investor and actually see what we've done with them and see how fun they are to visit.
Yeah, so I'm probably jumping ahead here, but do you expect that the next iteration of this will be available for people to roll that corpus capital back into the next iteration of this?
Yes, and even right now, if somebody wants to resubscribe and say, well, I don't really need the income, so why don't I just, subscribe for an additional amount and put some of that money back in each year, we can do that right now if people would like to. If they don't need the income, they can reinvest it.
Yeah, got it. Thanks so much. Perfect.
Yeah, great questions though. And the diagram I'm showing at the bottom here is just that out of $85 million of transactions that I closed last year through the Investor Club, we've learned that the smartest families in the world who are worth 100 million plus, they focus in on just one or two areas and get really good at that. So we focus on multiple location medical practices that are profitable, and then Airbnb assets, short-term rental properties, vacation homes, whatever you want to call them. And those are the two areas that we're becoming hyper specialized in more and more every single day. Here we have a picture of our team, and this is what we're most proud about. A lot of investment organizations have 2 to 6 people, 8 people on their team. We have over 25 professionals on our team. Jen Myers is our head of property management. She comes with 16 years of vacation property management, everything from a luxury villa in Hawaii to working at Inspirato, a publicly traded luxury vacation property firm, as well as AvantStay, which manages over 700 properties in the vacation property space. And then Laura, if you'd like to introduce yourself, just because some of them might be speaking with you, feel free.
Hi, everyone. Again, my name is Laura Clay, the head of investor relations here. But really on a day-to-day basis, I would be communicating with you in regards to this fund or our portfolio in general. My background is actually in hospitality. I have about 15 years of hotel experience. I've worked with Marriott, Starwood, and independent hotels. So hospitality is really my passion there. So happy to help on all fronts when it comes to your questions about our portfolio.
Awesome. Thank you, Laura. And we do have a lot of staff from the hospitality industry, particularly Marriott. And then we have multiple real estate brokers on our team. So that helps us with scouting properties, getting access to MLS. The hospitality nature of running vacation properties is very relevant. And then like on the deal we're closing right now, we have our realtor's fee, because it's a W-2 team member, just rolled into reducing our closing costs. So we save $50,000 as we close that deal because of that team member being the one. And we went direct to the listing agent and then used our agent and have her fee being rolled into the deal. So it's just one of many little strategies we use to boost returns. This is one of our latest investors. This is Joe Williams. He's the co-founder of Keller Williams. He has not only invested his cash with us, but he's joined our advisory board. And he has 173,000 real estate agents. You've probably heard of Keller Williams as a brand, and he's already sending us over deal flow because he travels around to different offices, and he's like a celebrity walking into these different offices, and they ask, hey, what are you doing lately? And he is investing in land. He's also on our board. So he's helping us with getting access to deal flow and just a great person to know in the industry. Importantly, after 5 decades in real estate, he said that he's buying right now because other people are not. And I'm going to get to that near the end of my presentation. I think we have maybe a question that came up. Yeah, but please do post your questions whenever you have them. So here's just showing inside. I logged into Airbnb this morning. You can see 5-star ratings. We have 100% 5-star ratings over the last 30 days here. Here are some of the ratings. I'm not going to read them off to you because you'll have access to these slides, but they say it was everything they expected and beyond. The next person said their group of 11 came in and the place was beautiful, fun, peaceful, true getaway, 20 minutes from the Grand Canyon. This person said it's one of the best Airbnbs I've ever stayed at, beautifully furnished and very clean, well worth the money. So just some reviews you can see. If you want to hunt down my Airbnb profile, you can do so. You'll see my wife and I with a backpacking picture there, so you know it's for sure us, and everything checks out through the links on our website, so you can kind of vet us that way. I also ran an investigative due diligence report on myself. You can have access to that. And VCheck, who did that due diligence report on myself, does 30,000 due diligence checks a year. So you can always call them and make sure I didn't make up the due diligence check. It's just something good to have with anyone you put your money with. Here's proof that we're a super host. This company, Buy More Time, is one reason why we're a super host. They respond to every guest message in 3 minutes or less. And Airbnb ranks people higher in their algorithm based on positive reviews, money you make them, 100 other factors, but your response time as well. And you cannot be a super host if you don't respond quickly. BuyMoreTime.com helps us with a team of a dozen Filipinos, 2 Americans, and they respond constantly to all of our guests. And they're kind of a secret weapon for our vacation property network. This will be important in one of our investments further on. So remember BuyMoreTime.com and how it really helped us in managing our properties. One reason I love vacation properties is that the institutions don't love them yet. Institutions are crowded into multifamily. They own 25% of them. But even though everybody's heard of institutions buying single family residential homes, they only own 2.4% of them, and they own less than 1% of vacation properties. That's because it's messy. There's service, there's turnover, there's hassles about it. It's not as efficient as buying a big apartment building. But as groups like mine aggregate 200, 300, 1,000 properties into platforms, they make it attractive. We make it more efficient for them to buy it, and the cash flow profits are higher. And so the valuations are going to be going up on portfolios of vacation property homes. Most Airbnb assets are ran by mom and pop hosts that have 1 to 2 assets. I'm going to go through now our 8 transactions that we've either closed or contracted to close on in the next 15 to 20 days. This will be a big update from last time. Exciting. We're going to move through it very quickly because some of you are familiar with 1 or 2 of these already. First one was Park City. We bought this at the top of the market, late 2021, really hot real estate market. Even in that hot market, our strategy worked of doing all cash offers and getting a big discount. So this was worth about 1.33 million. We bought it for 1.05 million by paying all cash, closed it in 14 days, no hassle. And it's now worth 1.5 million plus. So we have a 45% gain locked in because we bought it below its value then, and then it's gone up in value. We also converted it to sleep an extra 6 people. It was sleeping 8, now it's sleeping 14. And on the equity gain alone, we produced about a 45% return plus those cash flows. So that's one asset that you'd have equity in if you invest with us. Just 15 minutes from the slopes, 20 minutes from Salt Lake City. Here's the inside of the cabin. We got leather chairs in here instead of these cloth ones. Here's the bunk bedroom that looks out to the trees. Transaction number 2 is really unheard of terms. I would challenge anyone who's invested in a lot of real estate deals, even if you've done 100 real estate deals, you probably haven't gotten terms this good. And that's a pretty bold statement, but I've ran 190 live events through our investor club. We speak to thousands of investors per year, and we did a 70 property co-investment, and we got a 16.5% preferred return plus 50-50 profit split after that. That's a preferred return per year that we negotiated. And we can do further investments into this group if we'd like to. It gives us mass diversification across our portfolio. And this is one of 20 transactions in our fund, but one of your 20 transactions that you're getting equity in now is this co-investment into 70 properties that has the 16.5% preferred return. So this is amazing. For those of you familiar with preferred returns, everybody likes to offer 6 to 8% and then give you a 25%. Gives you 75% of profits, maybe, is the industry average. Most who offer anything close to a preferred return of 16% offer you 0% upside after that, not 50-50. Transaction number 3, I'm actually going to attempt to play a little video here. We'll see if I mess it up with the screen share or not. And this is over here. Let me pull up my website for it. And this is important to show you because there's no other asset like this anywhere on Airbnb. And that's what attracted us to it.
Yeah, we don't have the sound, but that's okay.
All right, so you get the point. It's super unique. Jurassic Retreat is what it's called. That property gets booked for birthday parties. It gets booked just by traveling families. That's in the state of Washington. And we're getting familiar with how that property is operated now that we acquired it just 4 weeks ago. We're expanding the sleeping capacity. You can see in the front of the house, that wooden colored box in the front, that's a game room. We're converting that to sleep an extra 4 people and boosting the sleeping capacity in that asset. And we have another idea that's going to add another 8-person sleeping capacity to this asset. So this again was listed at 1.3 million. We bought it for 1.05 million. It's a unique experience asset. We got seller financing at 6% and change on this asset over, I believe it's 7 years, national news coverage on this asset. Here's a picture of one of the dinosaurs. These are animated life-size dinosaurs. There's 7 of them, plus a hot tub. And here's another picture of one of them. And then the inside is very nicely done as well. It's not a piece of junk cabin at all. It's very nice feeling inside with the finishings and everything. So that is an example of when you hear about Airbnb and like, oh no, there's too much supply going on the market. We choose properties that either sleep a lot of people, which I'll show you some data on soon, or are very unique experience assets, or both. And every asset we buy, we add additional sleeping capacity because we can charge more and it becomes a more unique asset on the marketplace. And Laura, everybody can see my slides again, right? Just to make sure.
Yeah, you're good.
Awesome. All right. So transaction number 4, this is Sedona. This is the one we were 15 days away from closing last time we were here with Family Office Insights. This is 3 buildings we're acquiring on 1 acre. Again, it was worth about $1.3 million. We bought it for $925,000. We're doing a fast renovation flip on this. Half of the renovation's done. The other half will be done in about 10 days. And this one we expect to be a 2x return in just 4 to 4.5 years. There's just a lot of demand for Airbnbs in Sedona. There's 3 million tourists a year that go there. And this is a fun asset because it was 1 acre, has 3 properties on it. So there's lots of optionality for we put a privacy fence between asset 2 and 3, and then the front asset. So we can book the back asset or the front asset or both assets together. You would need a tetanus shot to go in this house before we renovate it. Look at this place. You would not want to live there. You wouldn't want to go on vacation there. You'd expect to be paying, $100 a night if you go to a place like this. But it was right down the street from all the restaurants. We literally went to the best Italian pizza place. My wife and I went to go walk through this the second time, and it was 0.2 miles to the main strip from there. This is another before picture of what it looked like in one of the back casitas. This is what it looked like after we renovated it. You can see you could charge probably a little bit more for something that looks like this instead of this. Also, it has a sleeping capacity of over 30 guests when the renovation is done. We also have a sauna as well as a hot tub on the property. And if you looked in the AirDNA data, you'd be able to see, we'll see if we have time to go over that today or not, you'd be able to see that out of 2,800 properties in Sedona, only 20 have 5+ bedrooms and sleep 16 people. Only 1 to 3 properties at a time on the market can sleep 20+ people that have 5+ bedrooms. So we're going to be one of the top 3 assets in Sedona in terms of sleeping capacity, which is something we're really excited about and expect this to be a great return for investors.
Rich, are you going to share the supporting data that suggests that more sleeping capacity books more money, more times, that sort of thing?
Yeah. We have some screenshot data from AirDNA showing that and proving that. So in different markets, there'll be different size families that typically go to that market. But we have some data showing how unique that is and why it makes it stand out for sure. Transaction number 5 here is we acquired equity in 7 assets, and we went back in time in that we made this investment in late 2022. But in 2021, there was massive appreciation in the market, and a lot of assets almost doubled in price. And so we were able to find an investment group, and they had not raised technically their full fund. So we just put a little bit of capital into the fund, but at the same valuation that people came in at on early 2021. And it allowed us to kind of go back in time and benefit from that appreciation, even though that appreciation had already happened. And they did this because they wanted a long-term partnership with us. They wanted us to do more investments with them. And us being able to talk about how we own billionaires.com, and we got $85 million worth of deals done last year. And our last investor summit had 1,400 people at it and 130 speakers on stage. They want to become friends with us. And so they do deals like this, and they do deals like the 16.5% preferred return because they want to do more business with us over time. We use that to our advantage to benefit you as the investor, because again, we only benefit when we've doubled your money. So this is just one example of a creative structure, creative timing of coming in. And one way our fund is different than other people's is that if you come into our fund tomorrow, you're in the fund until you double your money. If somebody invested 6 months ago, they're in the fund until they double their money, and then they're out. And so it doesn't matter if you came in tomorrow or last month or 3 months ago, you're not getting less or more fair of a treatment. With many investment funds, that's not the case. You come in at a share valuation, and if you come in later in the fund, you may greatly benefit because now you have transparency on what assets are in the fund, you know how it's performing. There might have been big appreciation. So coming in as the last dollars in on a traditional real estate fund, where it's not essentially 100% preferred return over time, which is what ours is, can have a big benefit. And that's what we did here. And that's a family office level type strategy to employ. Transaction number 6 here. This is the one we're closing right now. This is going to be closed in 11 days from today. We have a last call for capital coming up in 8 days. This is an oceanfront property in Florida, an hour north of Palm Beach and Fort Pierce. It's a very popular surfing area. It's probably 50 to 70% of people come are families looking to enjoy the beach or surfers. And so this asset would have been at about 2.7 million valuation at the top of the market. It was listed just 90 days ago at 2.2 million. And the market started really going down about a year ago. So 90 days ago, it was listed at 2.2. We have it under contract at 1.71. And it should provide anywhere between a 10 to 13% cash on cash return. And we expect a 2x investors' money on this asset over a 5 to 8 year period. We're doubling the sleeping capacity of this asset. Most importantly, we're going to rebrand it and make it more bright and cheery. The current owner did replace the roof recently, which is great. But they're a mom and pop owner. It's a 70-year-old. It's their only Airbnb property. They write everything in a little paper notebook. They were living in one of the 4 units. Now that's going to be freed up and we can rent it out. And it's a perfect example of when you own one asset, you're not going to employ and buy 7 pieces of tech software or 20 pieces of tech software to run it more efficiently. She has the same prices every day of the year, weekends, weekdays, holidays, summer vacation, spring break. It's always the same price per night. Our prices change intraday based on technology and demand and whether the day is coming up soon and it's going to be left empty if we don't sell it to somebody. And we use over 20 pieces of software that someone who owns one asset might use 1 piece of software or no software. So that's the advantage of being vertically integrated and having many properties. And when we speak to other people, like the ones who run this portfolio of 7 properties or the one that runs the 70 properties, they're trying to sell us on investing in their fund. And we have to tell them, why would we put our fund investors into your fund? There better be a really good reason. Otherwise, our investors might as well just go straight to you, right? And so we need that really good reason. And that's what those 2 slides were about. But every single time we do that, they're telling us their best idea is running their fund because they're trying to sell us on joining their fund. So we become smarter every time we close one of those deals, but even negotiating those deals, we get smarter faster by talking to other non-mom and pop owners on how they're acquiring, how they're valuing properties, et cetera. So we're very excited about this deal. It's coming up very quick. We have about 70% of the capital in hand to close on this one. So we just need a little bit more. If you're interested, it would be awesome to have you join us short term for that closing. Here's where it is, near the ocean here. You can go to the right or the left to go on a path down the beach. There is an opportunity to acquire the asset next door that's been owned by the same family for a couple of decades, but they're in their upper 80s in terms of age. And we could make it into a 10 or 16 unit property instead of 4 if we're able to close on that deal. And trust me, I'm very thorough on following up. We started negotiating billionaires.com in October 2009, and I just closed that a year and a half ago. So we followed up for 12 years, every 2 to 4 months, and poked them until they complied. And during COVID, they crumbled and sold us billionaires.com for about $500,000, and they wanted 1.2 million for it for over a decade. So we'll follow up with this group, we hope, until we get it closed. Can't guarantee that, but we're excited about that opportunity.
Richard,
Number 7. Yep.
Is it fair to say that how you close all cash, partially financed, is idiosyncratic to the property and or where you are with capital raise?
Right. It depends on how we can get the best price possible. On this one, they didn't want anything to do with seller financing. They wanted all cash, surety of closing, because 27% of all properties under contract right now don't close, usually because the bank messes it up. For Jurassic Park, they were open to carrying a note. That made it easier on the raise. For a motel that we really wanted to buy, they just wanted too much money for it, and we walked away, but they were offering us 12-year seller financing at 3%. And it was amazing seller financing, but they wanted sky-high prices. And I said, are you kidding me? The comps you showed me don't even warrant anywhere close to that. So we had to walk, and it would have been a beautiful oceanfront motel to own, but they're trying to sell it on the beauty and not on the actual value of the business asset. So it's really about how do we lock in the best price for investors. And if that means we need to raise 1.7 million cash, then we'll do that. We could always get bank debt on this the day after we close, or a private note from an investor or something like that if we needed to. But yeah, good question.
Yeah, the old saying, you make money on real estate when you buy it, right?
Yeah, exactly. And when you buy low and then you have a formula to force appreciation, which is doubling the sleeping capacity, and we believe that at some point real estate will go back to a record high, then it's going to allow us to sell high. If inflation takes off, our portfolio will defend you, because Airbnb rates and real estate typically track with inflation. So I believe we'll do well if inflation does come back and become even worse than it was last year, for example.
Got it. Thank you.
Yep, no problem. Transaction number 7, you may recognize from last time. We had just closed on this when we were on the webinar last time. This is not about buying a property and then trying to make it look like a theme. We bought an Old West trading outpost that had been a trading post for 50 years. That's why there's literally a beef jerky sign on the door. And we found this off market. It was not an MLS. It was not for sale. We went to the largest property in the Grand Canyon Junction area, approached them and 4 others, got in negotiations with 3 people and sourced this off market deal. They wanted 1.5 million. We got it for $1 million plus furnishings. And there's a leather vests and cowboy hats you can dress up in inside. It's very premium feeling inside, and it sleeps 22 people, 12 in the front house, 10 in the back house. We rent them out separately as well as together. And this is a really unique asset and large format asset. This is themed just like the Jurassic Retreat property. There's no other assets like this on Airbnb in the Grand Canyon, and we're getting great reviews for it. You can see the picture down below here. This was already an Airbnb. It had gone live a month before. It came with $50,000 of receivables that were coming in over time. 3 million tourists a year go to the Grand Canyon, almost the exact same number as Sedona. We got seller financing at 5.5%. And we bought this based on the value of the real estate. We hope to sell it one day based on the value of the cap rate, meaning we'll sell this as a business asset, and we bought it as a real estate asset because it didn't have the track record yet to sell it to us based on the value of the cap rate and the cash flow and NOI. This picture of the inside to show how nice it feels inside. This is the kitchen. This is another asset that we acquired as part of that 7-asset portfolio I was talking about earlier. It's just an example of one of those assets. Transaction number 8 here is one of the most exciting ones because it's so unusual. I think most people who would run a vacation property fund would focus on just buying vacation properties. But we don't benefit until you double your money. So we're looking for any way we can do that. BuyMoreTime.com is a big reason why we're a super host. They help reply to people in 3 minutes or less on all of our Airbnb listings. And we had a 3-hour lunch with them and gave them so much value. And they saw what we've built with Family Office Club. They said, hey, Richard, we need a family office on our advisory board. And I gave them some strategies, and they went from managing 40 properties to 70 properties in 1 month. And they've been in business for 7 years, and they had only managed 40 properties, and we grew them to 70 in a month. They said, Richard, you've added so much value. We want to give you 33% equity in our company. If you would be willing to do that and just, help us and give us strategies and introductions, help us with upgrading things to institutional quality. And I said, great. We've already tested you out. You've already made us a super host. We're happy to do that. Of course. And there's nothing in my fund docs that say if Richard Wilson benefits and somebody gives him equity in a company, he must put it in the fund, right? Like I didn't write that in the fund docs, but I want to double the investor's money. So we negotiated 2 things. One, we get free communications management across all of our Airbnb assets. That's worth $10,000 a month in savings, $100,000 a year. So by lowering our costs, we're going to double your money faster. Also, we have the intelligence coming from them. They've handled over 30,000 nights booked across all their clients. So they've learned a few things while managing 30,000 nights. And also, we will contribute all profits, dividends, and capital gains that would come from this equity holding to the fund until the point where we've doubled out the investor's money. So it lowers costs and potentially gooses the return if they have an exit, partial exit, or start showing big profits, every quarter or year. So this is an exciting one because, again, it's a family office type strategy to be so strategically valuable to someone else. You get to invest on sweetheart deal terms, or you get equity and you don't even have to pay for it, like in this case. So we're excited about deals like this. This really shows the leverage of us running our family office club for the last 16 years. And this deal right here is confirmed in writing. It'll be 100% closed within the next 4 weeks. Every other deal you see on these slides, these are not proposed deals. These are already closed, already funded, 100% closed deals. The Florida property, it's already under contract, passed inspection, we're closing on that in 11 days. I don't see anything that could mess it up. So that's important to know. These aren't like, hey, here's a creative idea. Maybe we could go out and do this crazy thing. And then you're like, maybe he'll do that. Maybe no one will agree to that. These are all things already agreed to in writing, under contract, which is, I think, important to state because they are pretty creative, I feel like. So in short, if you place your capital with investorresidences.com, you can use the properties and get exclusive experiences. You can have a very aligned partner that doesn't make any money off of you until you get all your money back and then double your money. It's really weird to me that most of the industry takes your money, charges you a whole bunch of fees, and says, okay, we're gonna try to make you some money here. We're doing it the opposite way. You get a appreciation and inflation hedge, and then you get a quarterly profit share. And then within that 5 to 8 year window, we're trying to double out your money through long-term capital gains and a refinancing on these assets. All of the seller financing terms we've done to date are 5 to 10 year terms, meaning that those notes will be almost all the way paid off or all the way paid off within that 5 to 8 year period. And we have no prepayment penalty. So we can replace all of those with bank debt anytime we'd like. So you can put your money to work within off-market deals, properties that we pay all cash for, deals that take us months to negotiate with seller financing. We're laser focused on this as our only real estate niche platform. Like I said, in the operating business world, we just do profitable medical practices, and real estate is just vacation properties. And you're able to stay at the property 1 night per year for every 25,000 you invest. So most investors come in for 100 to 200,000 a year. So it's 4 to 8 nights a year you can stay at the properties. And then after you double your money, you still get a vacation credit for staying at the properties a further amount of time. So if you want to invest in our 100 property vacation fund, now is definitely a great time. And I want to end the presentation with showing you this picture here of Howard Marks. I've been reading a lot of books by billionaires. He is the founder of Oaktree Capital, one of the sharpest billionaires out there, kind of like Ray Dalio level type intelligence. And he wrote this book called The Most Important Thing. And in that book, he talks about how when the market gets scared and there's fear, that's when you should start to be optimistic and layer into things, because the fact that other people see risk and go back means there's less risk in the market because you're acquiring things at 20 and 30% off. He said when the market looks most toxic is when you should be most aggressive, still in an intelligent way, and not act like the herd. You should be pessimistic when others are optimistic. You should buy when there's blood on the streets. Everyone's heard that 1,000 times, but most people I know right now are sitting on their hands and saying, oh, I don't know where the market's going. I'm a little bit afraid. I don't know. It seems like things are going down in value. It's like, yeah, that means they're on sale. That means it's probably a good time to maybe be buying, versus it was a half miracle. We got that Park City property at a 20% plus discount in the hottest real estate market that has been around the last 5 decades. And so this slide is very important because you should be acting, whether it's with us or someone else, in acquiring assets when others are unsure what to do or have fear or are not moving forward. Wall Street Journal posted this. This was 4 months ago. They said the luxury home market posts its biggest decline in a decade. It's like crickets. That's when you want to be the cash buyer, because the other people, they're lucky to even get a bank finance deal. And then 20% of those don't close if they're informed. So I'd much rather have a cash buyer come in and close in 14 days or in 30 days, et cetera. So this is our simple formula. We buy low with all cash offers and seller financing. We sell high by doubling the sleeping capacity of the assets. We have a great team. We're a super host. You get equity exposure in 100 plus assets. We're super creative in how we structure those. We're the most aligned real estate investment structure you'll ever find. And we're just focused on selling your money before we profit off of your money in any way. So that's our basic simple formula. My name again was Richard C. Wilson. The platform is investorresidences.com. And I'm happy to answer any other questions that anyone has here on the webinar.
Hey, Richard, can you talk about, to the extent that you can, how much you've raised so far and how much you've deployed?
Yeah, sure. Great question. So personally, I've put in $775,000 of my cash, not like time or assets or anything weird like that, of my actual cash. And we also have about $9 million of commitments made. We have about $3 million of cash in the assets that you see here within the slides. And some of our investors who put in, like we're dealing with a Silicon Valley tech investor, wants to be allocating $5 million. They'll put in 500K or $1 million per property. Other ones that contribute, one of ours put in 1.33 million as a commitment. They'll put in $250,000 either every 8 weeks or every time we close on a property. So some of them are systematic of that nature. And it's a way for people to get to know us. So those who come into that more than 500K or $1 million like to either do it on a time basis or just like look at our underwriting on each deal as we go and say, okay, yep, I still like it. Okay, great. And then they put in those additional amounts. We are only looking to, it's a $10 million fund. We can oversubscribe up to 15 million if we'd like to. And so we think that we'll be closed up on raising capital for this over the next couple of months, hopefully.
So if somebody wrote a check 6 months ago and someone writes a check, having not prior written a check, the clock starts ticking on their double their money based on when they put that money in.
Right. So if they put in 250,000 to begin with or 500K, then the clock starts on that 500K the day that money comes in. The other investment they do the next month for another 500K, a separate clock on doubling that money starts at that point, almost as if that's a different person that invested. So you're doubling your money here, doubling your money there, and they're on 2 different paths. So this money will get doubled out first, and then that one. And it's an important question because if we have 52 investors in the fund and we double out 10 of them, now all the profits flow to 42 investors, and then eventually 32, and then eventually just one investor is getting all the profits. And we still don't benefit till every single investor has doubled out and profited, but it goes faster and faster the more that we double out investors.
Got it. Yeah, that waterfall would be interested in seeing. I mean, I get it because it's super simple,
Sure.
but it is unusual, and good for you for thinking about it. So nicely done, Richard. Thank you. We're going to run out of time here, so.
Sure. Yeah, I can let everyone go. I guess if anyone has questions, it's just richard@investorresidences.com, or you can just go to investorresidences.com. And then my cell phone, if you want to shoot me a text message, is 305-333-1155. And appreciate everybody's time and attention here today. And thank you, Arthur.
You're very welcome. By the way, the Park City property I've seen on Airbnb.
Oh, nice. Awesome.
Yeah, I've spent a lot of time out there, so it's poking around.
Area.
Yeah, really nice. Laura, sorry I didn't introduce you at the beginning, so my faux pas, but thank you for being with us. And Richard, again, extraordinary work. We've known each other for quite a long period of time, and really happy that you're doing so well and focusing on this. It was like what you were saying, medical buildings and this, right? Focus is important. So good for you.
Yeah, exactly. And medical practices, we don't do any medical buildings, just to be super clear. Practices, but yeah, we love that focus, and we've enjoyed getting to know you more. So I hope that we can see you at one of our events this year when it's easy for you to pop in.
Yeah, for sure. Yeah. So thank you. We're going to make sure everybody gets in touch. And as I say, thank you for spending the only thing you can't make more of, and that's your time. Till next time. Thank you very much.
For sure.
Thank you.
Thank you.